Hello, everyone. Welcome to Wally Global. Today is April 7th, 2025. Really terrifying. The Hang Seng Index of the Hong Kong stock market just plunged 3,021 points, the lowest point of the day, and closed at the same time, breaking two records. The transaction record of more than 600 billion broke the record since the founding of the port. In addition, the number of points is also the highest. It can be said that this is a panic sell-off and it is the worst index in the world. The market fell by 13%. You saw that the cover just now was more than 12.87%, and it has not been updated. The latest is a drop of more than 13%, which is more than twice that of the United States. Why is it like this? This video will tell you why Hong Kong has fallen the most. In addition, what I am most worried about is the economic situation in the future. Hong Kong's extreme challenge actually starts from now. The fuse of this stock market crash. Before we begin, I kindly invite you to subscribe to my channel. It's completely free. Feel free to leave a comment, like the video, and share it with your friends to help support the channel.
Thank you for your support.
Everyone knows that the Sino-US trade war has heated up again, and China's economy. Last Wednesday, April 2nd, US President Trump announced the imposition of so-called reciprocal tariffs on all trading partners, which means that I will add back whatever taxes you collect. However, his calculation method, even if he adds his trade deficit with others, China adds up to 76%. In addition, Trump has imposed tariffs many times during his first term and during his current term, and China is not to be outdone. Last Friday, April 4th, China immediately retaliated by imposing an additional 34% tariff on all American goods. This tariff war is on the verge of breaking out, and global stock markets were immediately under pressure. Last Thursday, April 3rd, the Asia-Pacific stock and bond markets all began to fall. The US 10-year yield fell to 3.9%. But it is strange that gold and oil prices did not rise but fell. However, this signal is not worth being happy about at all, because usually, when stocks fall, those who are safe haven will go to gold, and gold will rise. If even gold falls, that would be a disaster, a big market crash. In fact, even gold will fall, and this situation is quite dangerous. Spot gold fell below $3,000, and New York crude oil futures also fell below $60. These chaos reflect that the market is really panicking. Back to Hong Kong, the situation is even more intense. Why? The Hang Seng Index plunged 3,021 points on April 7th. It was a historic day. I have never seen a drop of 3,000 points in one day. In fact, this number of points is the largest and most terrifying market drop in history. It is the largest closing since the founding of the port. It is also the lowest point of the day. It closed at 19,828 points. Look at this chart now. The Hang Seng Index is no longer updated. The latest is actually 13.22%. Now you see more than 12 points here, which means that relative to the United States has fallen by no more than 6%, Nasdaq 5.82% to Jones 5.5%, which means that it has fallen more than twice as much as the United States. Therefore, the situation in Hong Kong is worse than that in the United States and worse than other regions in Asia. You can see this chart and report the index to everyone. The state-owned enterprise index fell by 1,157 points, a drop of 13.75%. The index closed at 7,262 points. The technology index fell even more dramatically, down 911 points, a drop of 17.16%. It closed at 4,401 points, and the turnover was also a record high of 620.9 billion, a record high. It reflects that the market is now experiencing a panic sell-off, a very serious panic sell-off. It is the lowest point of the day, and the gap opened 2,000 points lower. If the gap opened 2,000 points lower, it would have been very aggressive. In addition, after closing at the lowest point of the day, it is actually not very optimistic. It should be said that the latter part seems to be supported by the entry of northbound funds, but it can't be supported, and it still closed at the lowest point in the end. In comparison, the US stock market, as I said just now, also fell, but it is far less than that of Hong Kong. This time, Hong Kong's fall can be said to be the largest in the world. In this stock market crash, 83 constituent stocks of the Hang Seng Index closed low across the board, and none of them were spared. Among them, 52 blue-chip stocks fell by more than 10%. The heavyweight HSBC stock number 0005 fell 14.75%, Alibaba 9988 fell 18%, and the Hong Kong Stock Exchange fell. The Hong Kong Stock Exchange is 0388, down 14.3%. All technology stocks fell by double digits, and the worst was for Ruoming Bio 2269, which fell by 26.4%, and Lenovo 0992, which fell by 22.9%. The decline was really shocking and astonishing. Export-related stocks must have been the hardest hit because the trade war directly hit the export business. For example, Xinzhou 2313 fell by 11.2%, Jingyuan 2232 fell by 12.9%, and Tektronic 0669 fell by 10%. Shipping and terminal stocks were no exception. China Merchants 0144 fell by 12%. Orient Overseas 0316 fell by 14%. And Chung Kong 0001 fell by 8.3%, closing at 40.240102. Trump also said that he would not sign a trade agreement with China until the trade deficit problem was resolved. The market collapsed as soon as this news came out. But let me digress. The Hang Seng Index fell below the 20,000 point mark today and plunged. I just said that it fell by 3,100 points at most and finally closed at 3,000 points, the lowest position since January 24th this year. But it is amazing that although there was a river of blood, there were actually 3 public utility stocks that rose against the market. Ka-shing and Victor Li's family's Chung Kong Infrastructure 01038. The Netizens of CLP Holdings of Electric Power 10 Industry Number 6 and Michael Gardner Farm said on the Facebook page of the Tangshan earthquake that although there was a river of blood, some stocks still rose. You said that Chang'e was really amazing. Ka-shing became a few bright spots because these public utility stocks may be defensive and used for risk aversion. In fact, Ka-shing and Buffett have saved a lot of cash. Now not all of them have been transferred. A lot of cash has been transferred, and everyone feels that the market is weird. Whenever Ka-shing does something, of course, something happens later. Why is the decline in Hong Kong this time the largest in the world? It is also one of the themes of this film. There are several reasons. First of all, the connection between Hong Kong and US stocks is close because Hong Kong's open economy. It is often said that Hong Kong and the United States are rising in the East and falling in the West. In fact, the rising in the East and falling in the West means that Hong Kong and the United States are decoupling. Now, Hong Kong and the United States have certainly not decoupled. If they decouple, it will be troublesome. Hong Kong has become a closed economy, at least not yet. So when the US stock market falls, the Hong Kong stock market usually follows the plunge, but this time the US has a chance and may not have finished falling. Let's wait and see tomorrow. Hong Kong has already led the decline more than the United States. It has fallen by 3,021 points, more than double the decline. The second is that Hong Kong's own economic structure is facing a paradigm shift. Structural change is not cyclical. The whole thing is different. In addition, trade logistics itself is one of the most important pillars of Hong Kong. Among the 4 pillar industries, if the Sino-US trade war is launched, this industry is affected. As a free port, Hong Kong is directly affected by China's countermeasures. Why is it related? Because originally, Hong Kong's exports went mostly to China, not to the United States. However, due to Hong Kong's status as a free port, many exports are re-exported to Hong Kong and then to China. If China imposes tariffs on the United States in turn, it means that the free port is almost decoupled, so Hong Kong will be particularly hurt. In addition, Hong Kong is a free port, but this time, the United States has said that Hong Kong and China will become one and the same. Ordinary cities, because the tariffs are exactly the same, more than 70%. Hong Kong, such an open and free economy, cannot accept this at all. In fact, the entire economy. The big problem is the collapse. China's exports are blocked, and Hong Kong's transshipment port logistics are also under pressure. In addition, Hong Kong itself is already a perfect storm. I just said that the economic collapse, retail and other industries, all aspects of the industry, plus the government's fiscal crisis, the deterioration of Sino-US relations, and the tariff war are simply adding insult to injury. What's more terrifying is that there are actually hidden worries and economic crises in the future market. I want to say that crises have always existed, but the kind we are talking about now is an extreme crisis, not an ordinary economic crisis. What's more terrifying is that these impacts have not yet fully emerged. Some people still estimate that the Chinese economy will collapse at any time. Think about it. China relies heavily on exports. The United States accounts for 18% of exports. China's exports are not that much, only 18%. No, it was 18% before. You said it was not much. In fact, if China's exports were reduced by 5%, it would be unaffordable already. Now 18% is simply a decouple. And this is underestimated. Since the first day of the trade war with Trump, China's supply chain has penetrated into places around the world, including Laos, Vietnam, Thailand, and Mexico. The US's global tariffs this time seem to be aimed at China. Vietnam just knelt down and said that it would not collect tariffs from the United States. Vietnam hoped the United States will not collect 46% tariffs. It has really affected Chinese companies in Vietnam. It has moved and moved again, but it is useless. But it turns out that although Vietnam knelt down and accepted zero tariffs from the United States, it has instead launched an anti-dumping investigation on China. It seems that it will impose tariffs on China in order to please the United States. So it is not only 18% against the United States. If this is the case, it is estimated that many Chinese companies will face bankruptcy and a large wave of unemployment. Not to mention that people will buy houses and save money for consumption. Deflation and overcapacity, those factories will push prices to sell at a lower price because they will disappear if they are stored in warehouses. Warehouses also need money. Panic sells goods to the inner circle and sells to other places in Hong Kong. If they sell to other places, others will anti-dump. That is, those outside the United States. China's collapse directly affects Hong Kong. Hong Kong is very dependent on when the mainland is deteriorating in terms of stock market, financing, tourism, etc. Hong Kong is not only in trouble with exports and logistics, but also the entire economy. If such a situation occurs in the mainland, will there still be so many mainlanders coming to Hong Kong to buy houses? The Hong Kong property market has only seen mainlanders coming to Hong Kong to buy houses, which has caused Hong Kong's house prices to fall by only 30% to 40%. If even mainlanders have this problem, there will be many people queuing up to buy houses and new houses at the beginning of this year. Developers are very alert and immediately sell them at a low price. In fact, many people who bought houses decided to buy houses because the stock market is booming and the index is rising. Some real estate salesmen and some columnists are really the kind of writers who say that when the stock market rises, the house will definitely rise. In fact, the stock market has risen from 14,000 points to now, and the house has not risen but has fallen. The truth has been revealed. But now that the stock market has fallen, what should we do? Will those who bought houses become part of the wave of cancellations? It can be said that Hong Kong's challenge, Hong Kong's extreme challenge, has just begun, and it is a comprehensive challenge in all aspects. I don't know what everyone thinks. This episode is almost done. You may as well leave a message below to tell me your opinion.